JP, good to see you, brother. How you doing? How you been? First one in today. Yeah, the live show's still not coming up. It shows that I'm live, but it's not coming out. So today it was confirmed by Restream because it seems like I wasn't the only person that was having issues with Restream regarding connecting to X. It seems like it's a maintenance situation with Restream in X, or a problem with X in general, which I hope it gets resolved very fast. Matt, good to see how you doing. How's things? Hello, Miles. How are you? T, good to see you. How you doing? How are things? Hi, Miles. XLP Den, good to see you. How you doing? I can't even share it or retweet it like again tonight. Yeah. So I posted something inside a Telegram group, a screenshot from Restream, where it shows that essentially they're having difficulty connecting to X, or X is having some sort of issues of live streaming right now. Hi, Miles. Good to see you again. Artistic, good to see you. How you doing? Good evening, Miles and CMF Free Fabric. Good to see you. How you doing? Took me a while to find you again. Sorry about that, Matt. But you sound good. Let's go, JP. Thanks so much for that. Good evening, Miles and all CMF. Addy, good to see you. How you doing? From wherever you can, share the live. However, you're able to, like yesterday, a lot of people from the CMF was able to share the live somehow. Please do that again today. Essentially, share the live somehow. Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? So yeah, let's do that, CMF members. Okay, let's do the introduction, disclaimer, what we're gonna go from tonight's live, and then we go straight into the first news, which is regarding BlackRock. Before we do that, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I essentially share with you guys is not financial information. Now, we also do Q&As on this live as well, which means if you do have any questions anywhere in between the live show, put it down inside the comment section. More than happy to help you out. Also, this is episode 439 of the CMF live show everyone's watching right now. If you are capable in some sort of a way to like and retweet the live show or post it somehow on your own profiles on X, please do. If also you're watching this on YouTube, just drop a like or a comment outside the live as well. Just like yesterday, some people yesterday were able to do, I don't know what's happening here, okay? Just like yesterday, some people were able to somehow share the live. Even Miles and CMF peeps, Semper, good to see you. How you doing? Hi, Miles and CMF, how you doing today, boss? I am doing great, Carlos. Good to see you. How you doing? Okay, on tonight's live, we're going to be talking about BlackRock in terms of what they just essentially said to the public regarding the crypto market space. And essentially, if we had a 1% crypto allocation from the Asian market space, what could potentially happen in the crypto space? We're also going to talk about tonight's live regarding Hong Kong and the UAE. It seems like there's some sort of competition going on in terms of who could get essentially, into the crypto space faster. Is it going to be UAE in Dubai, or is it going to be Hong Kong? There's apparently some sort of rivalry going on over there. We're also going to talk about tonight's live regarding Ondo and securities, regarding the conversations that they had. We're also going to talk about tonight's live regarding JP Morgan. Also, we're going to go through news on tonight's live regarding some other BlackRock news regarding the DeFi space. It seems like the banking sector is opening up to the DeFi space, which is, even though crypto itself is known as the Wild West, the DeFi space was definitely the Wild West. But it seems like the banking sector is open to the idea of entering into the DeFi space. We're also going to talk about essentially what actually maybe triggered the crypto market space to tank. We're going to go through news on tonight's live also regarding Franklin Templeton and Swift. We're also going to go through news on tonight's live regarding essentially the Tradeify section, which is traditional finance, and the Bitcoin section, essentially the crypto section, narrative perspectives, essentially we're going to go through. We're also going to talk about tonight's live regarding Ripple, as we always do in XRP, and today was essentially XRP Community Day. which I'm hoping people tuned into essentially Brad's speech or any other essentially great projects on the XRP ledger, that every single one of them had some sort of a voice on the X spaces, and they, shared their ideas, they shared their projects on the XRP ledger, which was essentially great in my opinion. Now, BlackRock is the first news we're going to talk about tonight's live. Before we do that, let's go inside the comment section first. Let's see what's happening there, and then straight into the first news. So let's see where we're at. What up, no, we were here. Good evening, Professor Miles and the rest of the family. Funky, good to see you. How you doing? What up, Miles and CMF? Ray, good to see you. How you doing, brother? How you been? You can just copy the link, then post it on your profile. Thank you so much for that, Shelly, for sharing it. So, CMF members, if you could just take 2 seconds and listen to what Shelly said inside the comment section, which is, if you really want to help me out, essentially, to get this live show out there, because, there's some difficulty situation happening with Restream and X connecting to each other. Shelly has just essentially said inside the comment section, you can just copy the link and then post it to your X profiles, in other words. So just copy the live show link you're watching right now and then post it on your own essentially profile on X. And that way we can get this live show out there. Even though people can't retweet to like it, at least you can do that essentially to boost the live show. So thank you so much to everybody who is now going out of their way to copy the link of this live show and post it on their own profiles. I had to sell H1 XRP to pay some bills. Funky, it's okay. It happens sometimes. Hi, Miles. Johnny, good to see you. How you doing? How you been? Feel bad at the losses, but had no choice. Fair enough, Funky. As I said previously, if you do end up selling your crypto assets in a market space like this right now, and it's just to pay bills, that's perfectly understandable. Has Dubai just tokenized diamonds on the XRP ledger? They discussed the idea of essentially tokenizing diamonds on the XRP ledger, I think a few days back, if I'm not mistaken. When can we see good times? Johnny, I would say we're not that far off from the good times. And we're going to go through some perspective regarding JP Morgan regarding the good times as well. Also, when can we... Oh, same here, can't do anything. Just don't know when the markets will turn around. Funky, I wouldn't say we're that far off. Quarter one is, starting off a bit shaky, but it has its reasons of why quarter one started a bit on shaky grounds. I'm waiting so long and down 40%. Johnny, it's okay. I took a loan. Johnny, that's up to you. Not financial advice whatsoever. Now, BlackRock is what we're going to talk about next on tonight's live. So here it is. BlackRock's executives have said that 1% of crypto allocation in the Asian markets, essentially space, could unlock $2 trillion in new inflows for the crypto space, which is massive. 1% allocation from the Asian market space, $2 trillion of liquidity for the crypto space. A senior executive from BlackRock today told essentially, this report is coming out from CoinDesk. A senior executive from BlackRock has highlighted the massive untapped potential of the Asian market space for digital assets. Speaking at a private industry event in Hong Kong today, the executive stated from BlackRock that even a modest 1% allocation to cryptocurrencies by institutional and private wealth managers in the Asia essentially Pacific region could unlock an estimated $2 trillion in new capital flows in that sector, which just shows how early we really are inside the crypto space, that just 1% from the Asian market space is $2 trillion of liquidity. The remarks underscore BlackRock's growing focus on institutionalization of crypto in the East, following the successful integration of the spot Bitcoin and Ethereum ETFs in the United States and Hong Kong. So here are some essentially key insights from BlackRock's outlook on the whole $2 trillion gap, or the $1 trillion crypto industry. The $1 trillion gap, the executive noted from BlackRock that Asian family offices and pension funds currently hold significantly lower crypto exposure compared to the Western essentially counterparts. Closing this gap is seen as the next major catalyst for global liquidity. Hong Kong as essentially as the gateway, the timing of the comments essentially coincides with the Consensus Hong Kong 2026 conference that is going on right now, where regional regulators are actively promoting a pro-innovation framework to attract global digital assets and firms. Stablecoin integration. BlackRock emphasized that the unlock isn't just about Bitcoin, but about the integration of stablecoins and tokenized real-world assets into the traditional Asian financial rails, particularly for cross-border essentially trade. Macro tailwinds as well. The projection comes as the Federal Reserve's recent $8.3 billion essential liquidity injection and a cooling US labor market have shifted investor eyes back towards essentially high growth markets in Asia for yield and diversification. The $2 trillion projection serves as a bold reminder of the scale of the next phase of adoption for the crypto space. While 2025 was defined by the US ETF launch, 2026 is increasingly looking like the year of the Great Asian Pivot, where regional wealth managers begin to flow into the digital asset ecosystem at an institutional scale. This is coming from a BlackRock executive at a Hong Kong Pro Innovation crypto event, where this BlackRock executive, in the most simplest way, said 2025 was about the US taking a step inside the crypto space. 2026 is about the Asian market space taking a step inside the crypto space. And when that happens, expect a tremendous amount of liquidity. Just 1% is $2 trillion. Imagine if it's 5%, 10%, 20%. We're not expecting 100% in 2026. But even 10%, 20% is a tremendous amount of liquidity to be entering the crypto market space. And once essentially one family office enters from the Asian market space, it could cause a ripple effect where others will follow in suit. Now, Hong Kong, on the topic of Hong Kong essentially remains committed to digital assets. So if you're wondering to yourself, is Hong Kong really open to the idea of cryptocurrencies? Is it really going to be the gateway for, the Asian market space to enter the crypto space? Yes, by the looks of it. Hong Kong is actually aggressively pushing for crypto regulations because they want to compete with the Middle East. And that's positive for us because when essentially jurisdictions walk away from the crypto space, that's negative for us. When essentially jurisdictions take a footstep inside the crypto space, that's positive for us. When jurisdictions start competing for the crypto space of who gets there first, that's bullish for us. So Hong Kong remains committed to digital assets, but feels competition from an aggressive UAE push. Today, industry leaders and regulators at the Hong Kong Essential Consensus event signaled that while the city remains steadfast in its goal to become the world's primary crypto hub, it is facing essentially increasingly aggressive competition from the United Arab Emirates, the UAE. According to reports from CoinDesk, the rivalry between essentially these two jurisdictions has become a central theme for essentially 2026 market space, as both vie essentially for the title of the global capital of digital finance. Now, I know America, essentially because of Donald Trump, has always aimed for that title of the capital of cryptocurrencies, but essentially they're not the only ones. The UAE is also essentially, saying that they want to become the capital of cryptocurrencies. Hong Kong is aggressively pushing also for the capital of cryptocurrencies. So is Singapore, and so is Japan this year, especially as well. The UK has mentioned it, but we haven't seen any footsteps yet. The EU is obviously, we're going to MiCA regulations. We can see their push for the crypto space as well. The UAE's aggressive push, the UAE essentially, Dubai and Abu Dhabi, especially within the UAE, has been praised for its speed in granting licensing and its concierge essentially style of approach to attracting major crypto firms out there. The recent congressional probe into World Liberty Financial, which highlighted alleged also UAE linked investments, is seen as a testament to the UAE's proactive strategy for embedding itself into a high profile, politically connected global projects. Hong Kong's institutional edge. Hong Kong essentially officials countered by emphasizing their focus on quality over speed, by leveraging its status as a gateway to essentially mainland China and its sophisticated banking infrastructure, including support essentially for cryptocurrencies and Bitcoin and Ethereum ETFs. And also, Hong Kong is positioning itself as a more stable and institutional choice for firms like Goldman Sachs and BlackRock. Simplest way to put it, it's like comparing the rest of the crypto space to Ripple. Ripple essentially took the institutional regulatory footstep to expand the XRP ledger essentially and to expand Ripple's footsteps in the financial sector, while other crypto projects just chose speed over anything else. And also, to point the fact, China, as much as it essentially comes on the news and hates the idea of cryptocurrencies or wants to ban cryptocurrencies, wants to ban tokenization, recently they were talking about it as well. Hong Kong is actually the gateway for Chinese businessmen or women or family offices to enter the crypto space. The stablecoin battleground, both regions are essentially racing to implement stablecoin frameworks right now. While Hong Kong is focused on its e-Hong Kong dollars and regulated stablecoin sandboxes, the UAE has become a magnet for firms like Tether, which recently made a strategic investment in Layer Zero to facilitate a native cross-chain movements from its Middle East base also. Talent and capital migration. Observers noted a tug of war for talent, with many firms essentially setting up a dual headquarters in both Dubai and Hong Kong to edge their bets. However, the UAE's zero tax environment remains a powerful draw compared to Hong Kong's more traditional tax and compliance burdens. So, why does this matter for 2026? Regarding Hong Kong and the UAE trying to see who gets there first. The executive firm, as we just talked about essentially 5 seconds ago, regarding BlackRock, the executive firm essentially from BlackRock, who recently predicted that 1% allocation is about $2 trillion entering the crypto space in flows, pointed to this regional competition as a catalyst. The race to the top between Hong Kong and the UAE is forcing essentially both jurisdictions to offer better incentives, clearer rules for the crypto space, and more robust infrastructure, ultimately accelerating essentially the institutionalization of the entire asset class, cryptocurrencies. For global investors, the friction between the UAE's startup and friendly agility and Hong Kong's institutional grade stability essentially provides a diverse set of options where essentially to deploy capital at the $150 trillion global payments market moves on chain. So it's not just that BlackRock and essentially the UAE is trying to, who gets there first in terms of crypto regulations, which is extremely bullish. It's also BlackRock telling the world right now, BlackRock executives telling the world right now that Hong Kong and the UAE are going head to head for crypto regulations, which is going to open the floodgates of trillions of dollars from the Asian market space and the Middle Eastern market space. Now, moving on from that to Ondo and securities. Before we talk about Ondo and securities, let's go inside the comment section first. Let's see what's happening there. And then we'll go straight essentially into, let's go inside the comment section, then we go straight into the next news. So let's see where we're at. We were at here, I think, inside the comment section. Okay, can somebody share it to the Telegram group to see if it will work off the link? Thank you so much. Yeah, I think Shelly is sharing that. I can see Shelly's notifications right now inside the CMF group. Thank you so much, Shelly, for teaching everyone how to share the live show. Thank you so much for that. Andrea, good evening, Miles and CMF. Bullix up. You good to see you. How you doing? How you been? Now, Ondo and security executives. Utility, not hype, and it will drive tokenization's next phase. Same thing BlackRock executives are talking about right now at the Hong Kong event. Same thing Hong Kong's essentially, financial securities are talking about right now. Same thing the UAE is talking about right now. Executives from Ondo Finance and Securities have signaled a shift in digital asset landscapes, moving away from speculative hype towards production essentially grade utility, which is what we love to hear inside the crypto space. Moving away from hype, going into utility, which is the entire purpose of cryptocurrencies. As I said many times, cryptocurrencies are not stocks. It's not about buy, sell, quick profits. It's about what they can bring towards the table. It's about utility, which was the entire purpose of cryptocurrencies. And we love to hear every time major behemoths in the institutional sector talking about we're moving away from hype, going into utility, because then it really shows which crypto project has the better end of the stick. So, speaking at the major industry event regarding Ondo Essential Securities, leaders from two firms, pioneers in the real-world asset space, argued that the next phase of market growth will essentially be defined by how seamlessly tokenized assets can be integrated into the $150 trillion global financial system. So here are the key pillars for utility phase that we should be expecting in the crypto market space. Beyond paper tokens, the executives from Ondo Finance and Securities emphasize that simply putting a treasury bill or a stock on the blockchain is no longer enough. The next phase we should be expecting requires cross-chain compatibility, allowing essentially these assets to be used as collateral in DeFi protocols or settled instantly across different banking rails. In other words, cross-border payments we should also be expecting as well. Institutional demand for yield. With the White House yield wars that are going on right now, in other words, bankers and crypto CEOs going up against each other. Crypto CEOs want yields for stablecoins. Bankers don't want yields because it would cause a bank run situation, are heating up between banks and crypto firms. Ondo and Securities see a massive opportunity with all this headbutting that's going on. They argue that institutional investors are looking for safe, transparent, and yield bearing digital instruments that can compete with traditional bank deposits. The everything exchange model. The discussion highlighted the launch of the networks like Layer Zero's Zero blockchain, backed by Seattle and ARK Invest, which we talked about 2 nights ago, as the ideal infrastructure for this shift. By using production grade chains, tokenized assets can move with the speed and security required by major market makers. Regulatory maturity. Both firms noted that clearer rules in the regions like Hong Kong and the UAE are allowing essentially them to move beyond experimental pilots into full-scale commercial deployments. This compliance-first approach is what they believe will finally unlock the $2 trillion in flows predicted by BlackRock executives from Hong Kong. The message essentially from Under Securities is very clear. The era of meme coins and marketing is being suppressed by the era of infrastructure and income. I love hearing that from the crypto space. I love hearing that from institutions. And I think everybody inside the crypto space is now love hearing that also too. When essentially, honestly, institutions saying we are moving away from meme coins, we are moving away from marketing, we are moving away from hype, we are moving away from speculation, and we are actually going towards infrastructure and income and utility. As Bitcoin continues to behave like a tech trade correlated with global liquidity, these utility assets are beginning to carve out a distinct niche, offering a more stable and fundamental value proposition by the institutional capital currently entering the crypto space. So, honestly, if you're looking at the market space right now and all you're thinking about is price action, don't think about it. Because price action will be solved, the easiest way to put it. Once we get momentum into utility, once we get momentum into regulations and utility, price action will be solved. Don't focus too much on price action. Focus on the regulatory essentially side, because regulations will create a foundation for the crypto space to move away from marketing, hype, and speculation to a essentially regulatory foundation where it's all about utility, which is exactly what we want. And the conversations that are happening right now with JP Morgan, Goldman Sachs, Standard Chartered Bank, Hong Kong regulators, the UAE regulators, or even the US regulators, or so on, it's all about utility. It's all about regulations and utility. We are genuinely moving and shifting away from speculation, hype, and marketing and meme coins to utility. This is why I say, like, 2-3 years ago, I said to everybody on TikTok lives, the last stage will be frustration. 2 years ago on TikTok Live, I said to everybody, we're going to go through everything, but the last stage before you just make it to the finishing line is going to be frustration. They are going to be dragging you through hell, and then you can cross the finish line, which is exactly what's happening. In terms of price action, everybody's being dragged through hell. But in terms of what's actually happening behind the scenes, it's all bullish news. It's conversations that are being made regarding regulations. It's the Hong Kong market space racing against the UAE market space to see who gets there first in crypto regulations. It's banks and crypto CEOs sitting at the same desk discussing crypto regulations. There's a lot of things that are happening behind the sidelines. Don't look at price action. Price action will be resolved and solved essentially with the regulatory foundation that's coming right now. And that as long as we have countries trying to win a race of who gets there first inside the crypto space, believe me, crypto is going nowhere and this market space is going to grow even bigger. Now, JP Morgan is what we're going to talk about next on tonight's live. On the topic of behemoths who are bullish on the market space, JP Morgan bullish on crypto for the rest of the year as institutional flows set to drive recovery. As I said, essentially in 2025, Q4, going into 2026, not just me saying it, Grayscale CEO, CZ, Brad, Monica Long, essentially Standard Chartered Bank, even JP Morgan's essentially analyst, Nicholas, and also Bloomberg specialist ETF analysts as well. Everybody said the exact same thing. Crypto.com, Binance, Coinbase, Kraken, list goes on, BNY Mellon. Every single one of them did what in quarter four? What did they announce in quarter four 2025? That every single one of them has created some sort of a VIP package platform for the next clientele entering the crypto space. And this is what JP Morgan is talking about right now. That retail money is pretty much done for. We're going into institution money. So, reports from JP Morgan's analyst, led by Nicholas, indicated a major shift in the bank's outlook, turning decisively bullish on the cryptocurrency market space. For the remainder of the year, JP Morgan has just said, or JP Morgan's analyst, Nicholas, has just said that JP Morgan has changed their tune. Now they're coming out and saying for the rest of the year, the crypto market space is going to be looking bullish. That's JP Morgan saying it. So, following a record $130 billion in inflows in 2025, the bank projects that 2026 will see even higher capital entry, but with critical change in leadership. The market is transitioning from a retail led hype to a more sustainable, institutional driven recovery. Key drivers for this bullish outlook that JP Morgan now has starting today: institutionalization over retail. While 2025 was dominated by retail investors and digital asset treasury corporates, buying essentially JP Morgan corporate buying, JP Morgan believes that 2026 will be defined by institutional capital. The analyst noted that the de-risking phase seen in late 2025 is now complete, and large-scale players are re-entering the market space. Why do you think essentially we had a shakedown in the beginning of the year, quarter one, 2026? Why do you think we had a shakedown inside the market space? Why was it essentially mentioned over and over again, quarter four 2025, we're going from retail money to institutional money, and quarter one 2026, we had a shakedown inside the market space? Positioning. The Clarity Act catalyst. The bank cited that the expected passage of the US Clarity Act as a primary enabler. Clearer regulations are expected to trigger a surge in institutional activity beyond simple spot ETFs, extending into venture capital, M&As, and crypto-related IPOs. In other words, JP Morgan is saying, you saw the inflow from ETFs. Put that to one side, because the next inflow coming into the crypto space is beyond what you can expect that we had from the ETFs. Bitcoin versus gold. In a striking valuation adjustment, JP Morgan stated that Bitcoin increasingly looks more attractive than gold, believe it or not, on a volatility essentially adjusted basis. This led to a theoretical long-term price target of 266,000 for Bitcoin. Although they clarified this is unlikely to be reached within current calendar year regarding Bitcoin's price point. But infrastructure and payments. The report highlights that institutional interest in shifting towards production-grade assets, especially infrastructure related to stablecoins, cross-border payments, and custodial solutions. JP Morgan has reportedly upgraded their digital assets to an overweight position in its alternative investment model, marking it as the highest projected return class among alternatives. This comes as essentially the bank is deprioritizing private equity and real estate in favor of liquid digital assets and public entities. Market context. The bank's optimism arrives just as the other essentially major players are making moves inside the crypto space as well. Just as I said, previously before, while retail was jumping out in quarter one and panic selling, not everybody from the retail section, but the people that did jump out from the retail section, their positions are being filled slowly by institutions. The bank's optimism arises just as major players are making moves. Goldman Sachs recently revealed its holdings of over $2.3 billion, which I revealed yesterday inside the crypto space. Seattle Securities and ARK Invest investing into Layer Zero, essentially the zero blockchain for institutional settlements. BlackRock executives talking about 1% essential allocation towards the crypto space this year, just from the Asian market space, is about $2 trillion. Or even Ripple essentially acquiring businesses to expand their footprint essentially inside the crypto sector, or crypto companies applying for essentially to become some sort of a tech bank or a neobank, you could even say. While the market faced early February jitters, While Bitcoin sliding briefly below $67,000 due to hawkish macro data, JP Morgan views these dips as stabilization signals rather than a broader downtrend, reinforcing their call for a resilient recovery through the rest of 2026. Again, this is JP Morgan telling the entire world, their analyst, Nicholas, telling the entire world that expect this year to be incredibly bullish, that the jitters or the ups and downs we experienced in quarter one is nothing, and that going forward, we should be expecting a tremendous amount of value, tremendous amount of liquidity coming through. We should be expecting regulations to be coming through to push utility. We're moving away from hype marketing and speculation, going into utility. And this is the same JP Morgan right now who is, essentially arguing with crypto CEOs on essentially the idea of not earning yields on stablecoins. The same JP Morgan that's arguing against stablecoin yields, but exactly the same JP Morgan who's telling everybody inside the crypto space that we have a different tune now. We think and we know that this year will be extremely good for the crypto space. Now, this is why I say don't worry about price action. Once that regulation comes through, once the utility kicks in, even JP Morgan's Nicholas essentially is talking about utility. So, moving on from JP Morgan perspective to BlackRock again. Before we talk about BlackRock, let's go into the comment section first. Let's see what's happening there, and then we'll go straight into the next news. So let's see where we're at inside the comment section. We were here. But XRP, good to see you. How you doing? How you been? Opinion on the current state of ACH and its future. ACH is a good platform for on and off ramps. It has multiple partnerships in place to help make that happen. There was a partnership between essentially ACH and Ripple as well for on and off ramps. On and off ramps will be around as long as essentially fiat exists, or cash exists, or fiat exists, and so on, so that that shift can happen. I'm not saying ACH is the only platform that can do on and off ramps. There are multiple platforms that can do it. So that's where essentially, ACH has the power play, you could say, pretty much. On its future progress, the moment the world goes more towards essentially becoming more digital, more towards blockchain, more towards tokenizations and utility and so on and off ramps in terms of bringing fiat to the digital world will start fading away. So ACH's future is not for decades to come. It could be quite limited, just to help the world transition. And then after that, if ACH, or even now starting out, ACH doesn't have any other plans up their sleeves, then their future isn't going to be forever. There's going to be a limited time period for them. The easiest way to put it. Other than that, ACH is still a good platform for on and off ramps for the time being, without a doubt. And I would say they'll be around for a good 5 to 10 years. Now, click on the three dots, then choose share broadcast, and that will repost it. Shelly, thank you so much for saying that. CMF members, if you want to share this live show right now, listen to what Shelly has said inside the comment section. Click on the three dots at the top, I'm guessing it is, of this live show, and essentially choose share broadcast, and that will repost it on your own profiles on X. So if you can, CMF members, take 2 seconds to click on the three dots and choose share broadcast, and that will repost it, so that at least this way we can get the live show out while this maintenance situation between Restream and X gets resolved. At least we can retweet like that. So if you do enjoy the live shows, if you do essentially like what I produce Monday to Friday, 10 p.m. for you guys, please do that. Essentially, click on the three dots, choose share broadcast, and that should share it to your profile on X. Hi, Miles, the CMF Peg. Good to see you. How you doing? How you been? And Shelly, thank you so much for that as well. Good evening, Miles. How are you doing? I'm doing great. Callie, good to see you as well. How's things? Hi, Miles. The CMF is X down. I didn't get a notification. It's X is having difficulty connecting to Restream right now. Greetings, Miles and family. I'm late. Apologies. No problem, Dina. Good to see you. How you doing? Hello, family. Let's go. Scott, how you doing, Scott, brother? Miles, I know we need liquidity and clarity, but if banks use Ripple or RLUSD and don't have to use XRP, how do we raise the price? Wow, Semper, good question. 1 second. Apologies. Good question, Semper. I don't know why is it every time I do the live show, it makes me sneeze. It's so weird. So Semper said, Miles, I know we need liquidity and clarity, but if banks use Ripple and RRUSD and don't have to use XRP, how do we raise the price of XRP? Well, technically, if banks use RRUSD, indirectly, it's helping XRP because when people end up using RRUSD indirectly, they're going to be more active essentially on the XRP ledger. When they're more active on the XRP ledger, they're going to be end up using XRP. So that raises the price and burns XRP at the same time. So indirectly, using essentially RRUSD would help XRP. Also, if people essentially if banks are using essentially Ripple, technically they're also still using XRP as well, indirectly or directly. So either one of those essentially will boost XRP's price point and burn some XRP on the way as well. So if anybody else is telling you otherwise inside the crypto space, if there are crypto influencers still till this day hating on XRP, trying to tell people that it has no future, it has no potential, and nobody's going to be using it, those people are morons. Honestly, genuine morons. We saw from the Epstein files essentially how much of a threat Ripple essentially is. If it has no future, it wouldn't be a threat to anybody inside the banking sector in any sort of a way. Also, Ripple themselves, Brad themselves, essentially introduced a PDF documentation to tell the entire world how XRP plays a core, essentially, polar star, essentially North Star, essentially in their own company. That XRP is the heartbeat of Ripple's footsteps. That XRP plays a massive role in pretty much everything Ripple does. But if there is somebody out there, so I don't know what happened there, but we are back. So don't worry. Let's go, Miles. Let's go, Scott. My repost button has been removed. I can't repost, so I will share by copying the link. Thank you so much for that, Scott. This is going to be great for all of us. Let's go, JP. Great news. Bring the institutional money. Let's go, Ray. Most people think we are in a bear market. That's true. Most people do think we are in a bear market. And as I said many times, this is not a bear market. It's a very highly manipulated market space. That's due to essentially being the Wild West and not having the correct regulations in place. Miles, we cannot trust these banks. They say one thing and do the other thing. The only issue is there's no option. We have to trust them because we need their money. Simplest way to put. I agree with JP Morgan. Let's go. The banks were quietly accumulating crypto whilst telling us it was fraud. That's true. The banks were quietly, not the banks themselves, but essentially the people with the bank's clients were the ones essentially buying the crypto assets. You know, when you hear news like BlackRock is selling Bitcoin, it's not BlackRock that's selling Bitcoin, it's their client base that's selling Bitcoin. It might be like some sort of a coordinated event, but it is again their clients that are selling Bitcoin or the bank's clients that are buying Bitcoin or selling Bitcoin as well. So the bank can say one thing, but their clients can do another. XRP is the king. Let's go, JP Morgan. I've shared a few times. Let's go, XRP Den. Thank you so much for doing that. I just followed Shelly's instructions and did that. Thanks, sister. Let's go, Funky. And let's go, Shelly, for saying that, for helping everyone inside the comment section, for helping everyone inside the CMF to share the live show. Thank you so much, Shelly. Brad said 75% chance Clarity Act will be done by April. That's amazing news. That happens. Expect weeks, months, essentially to kickstart the utility train. I honestly think that the Clarity Act will be passed by March 1st. If the Clarity Act is passed by March 1st, that will be even better because March 1st, as everybody knows, and if you didn't know, I'm a bit shocked because March 1st is my birthday. So if the Clarity Act is passed on March 1st, that would be an incredible birthday, essentially present to me, to be fairly honest. I shared a screenshot on the Telegram group if you're not sure what to do. Thank you so much, Shelly, for doing that, for sharing inside the Telegram group on how to share the live show. Copy. Let's go. Bless you. Thank you so much, Ray. Bless you. Autistic. Thank you so much. Scott. Bless you. Thank you so much. Semper. Thank you. Arnold. Shared. Bless you. Thank you so much, Stormy. Good evening, Miles and CMF. I'm traveling from Ireland, listening to this educational live many years, Miles. Thank you so much, Ian, for the kind words, and good to see you, brother. How you doing? The CMF is powerful as we stand strong together. Too many hurdles for the last few weeks, and we are still standing. Only the strong survivors. Facts. Let's go. Thanks. Let's go, Ian. Hi, Miles and CMF family. I'm sorry I'm late. Good to see you guys. Let's go for facts news. Let's go, Carl. Good to see you. How you doing? I've shared the most, though. Let's go, Ray. Thank you so much for that. A gift to Miles. Yes, let's go. It'll be amazing. Yeah, the White House said March 1st. Let's go. Let's go, Shelley. They wanted it done by then. Amazing. Let's go, March babies. Let's go, Ozma. Has Dubai just tokenized diamonds on the XRP ledger? I think, as far as what I know, they mentioned it, they talked about it, they're going to do it. I don't know if they have done it, but they have mentioned it, they have said they're going to do it. So they are going to do it. I don't know if they have done it already, yes or no. So I can take a look into it and get back to XLP. Then just leave a comment outside the live. I'll take a look into it and see if they have done it. As far as I know, they mentioned it, they said they're going to do it. I don't know about a deadline. Now, BlackRock is what we talk about next on tonight's live. So, as I said previously, the crypto space may be known as the Wild West, but the DeFi space was known as the bigger Wild West. But it seems like that behemoths like BlackRock are coming around and that DeFi isn't the Wild West they thought it was. So, BlackRock takes the first essentially DeFi step list built on Uniswap, as Uni essentially now is jumping 25%. In a historical move for decentralized finance, BlackRock has officially integrated its tokenized fund, Build, BlackRock's USD Institutional Digital Liquidity Fund, on Uniswap protocol. This marks the first time a major Wall Street institution has listed a regulated, treasury backed asset on a leading decentralized exchange. Following the announcements that came out today, Uniswap's native token, Uni, surged 25% as the market essentially reacted to the validation of public DeFi infrastructure. Key highlights of the Build and Uniswap integration that you should know about. Bridging Wall Street and DeFi. By listing Build on Uniswap, BlackRock is enabling institutional investors to tap into decentralized liquidity pools. This allows for instant 24/7 swapping for tokenized and traditional assets for stablecoins or more digital currencies without relying on centralized intermediaries. The Build USDC pool, the initial integration features a primary liquidity pool, essentially between Build and USDC. This setup provides a risk-off yield-bearing asset, the treasury-backed Build that can be easily traded against the market's most liquid, essentially stablecoins. Regulatory milestones. The move is seen as a major win for the SEC compliant tokenization model pioneered by Securities, BlackRock's primary partner for the fund. It proves essentially that regulated assets can successfully coexist and trade within a permissionless smart contract environment. Uni token's utility, the 25% price jump in Uni reflects a growing optimism that Uniswap is becoming the primary rail for tokenized real world assets. Analysts suggest that the protocol's fees and volumes could skyrocket as more institutional funds follow BlackRock's lead. So, why does this matter for the 2026 utility era that's now going around? Major institutions are now talking about utility when it comes to crypto space. This development perfectly aligns with the predictions made earlier, essentially, by executives from Ondo Finance and Securities, who argued that utility, not hype, would define the next phase of the market space. It also provides a concrete, essentially, use case for the $2 trillion in Asian flows projected by BlackRock as regional essential wealth managers are now regulated on ramp into the world's largest decentralized exchange. By bridging, essentially, by building and bringing Build to Uniswap, BlackRock has effectively turned the everything exchange theory into a reality, essentially proving that the future of the $150 trillion global financial system is increasingly being built on open source, on essentially on chain protocols. A long time ago, if you said to anybody inside the crypto space, they would have said, no, there's no chance that behemoths like BlackRock, Goldman Sachs, BNY Mellon, Franklin Templeton, or any other institution out there would want to use a public blockchain. It's just no chance. It's not possible. These institutions don't want public blockchains. They want private blockchains. But that's not the case, is it? Because if BlackRock is going on the DeFi space and going on Uniswap, what does that tell you? Because a long time ago, they would have said banks and institutions won't use the XRP ledger. It's public. Who wants to use that? Well, BlackRock is using Uniswap to push essentially their build. So, yes, behemoths like BlackRock, Goldman Sachs, Standard Chartered Bank, BNY Mellon, Franklin Templeton, Gold. I mean, the list just goes on. Every single one of them has mentioned that they are going essentially and using public blockchains as well, not just private blockchains, but public blockchains as well. And with BlackRock taking a massive, massive step, it shows that it's not just words on a piece of paper they're reading out loud to make everybody happy or everybody bullish or bring some hype into the market space. They actually took a step forward. It wasn't a speech, it was a step forward. Now, this is why I say don't focus too much on price action. There's a lot happening behind the scenes. Crypto's latest sell-off that essentially we experienced inside the crypto space is what we'll talk about next. So it turns out that the dip that we had inside the crypto space, that essentially, this is one of the reasons that we experienced that dip inside the market space. So a new analysis from Chainlink essentially came out, from essentially CoinDesk came out today. And it argues that the recent volatility, which essentially we saw in Bitcoin dipping towards $67,000, was not caused by fundamental failures within the digital asset ecosystem, but was instead essentially a TradFi driven correction. Unlike past crashes that triggered essentially by exchange failures or protocol hacks, this latest slide was a direct result of macroeconomic shifts and institutional dewelging in the traditional financial sector. So here are some key points that everybody should know about of what actually happened during this sliding of Bitcoin. So, correction with the Nasdaq. The sell-off mirrored a sharp risk-off move in the US tech stocks. As Grayscale recently noted, Bitcoin is currently trading at a higher beta tech trade, with traditional hedge funds and institutional desks faced a margin pressure in their equity portfolios. They sold most essentially liquid, high-performing assets, which in 2026 includes Bitcoin and Ethereum. Reaction to Fed plumbing. The market reacted nervously to the Federal Reserve's $8.3 billion liquidity essentially injection. While usually bullish, when the Fed injects money into the market space, it's usually bullish. And before I shared that news with you regarding the Fed injecting $8.3 billion, and I said that's bullish. However, recently, every time we have good news, the market reacts the opposite way for some reason. And it is being mentioned by CoinDesk themselves that usually injection of money from the Fed is bullish. So, while usually bullish, the scale of the move signaled to TradFi traders that there were essentially stress in the plumbing of the traditional banking system, leading to a broader flight to safety of the US dollars. Institutional de-risking, with JP Morgan cutting essentially Coinbase's price target and major banks clashing at the White House over stablecoin yields and institutional sentiments briefly turned cautious, the selling was categorized by large block trades on regulated venues like CME and Coinbase rather than panic selling offshore essentially retail exchanges seen in previous cycles. On-chain stability. Despite the price drop, on-chain metrics remained remarkably healthy compared to the past. Stablecoin minting, particularly Tether, continued, and decentralized protocols like Uniswap saw record volumes without the liquidations or death spirals that defined the 2022 and 2023 era. In other words, if there are still people calling this a bear market, it's not a bear market. It's just something happened in between where Bitcoin didn't react the way it's supposed to. It started reacting and following tech stocks, which in the past Bitcoin has done that, following tech stocks, but it correlated too much towards following tech stocks. Tech stocks went down, Bitcoin went down. And then people who were lending essentially and borrowing assets regarding Bitcoin ETFs had to essentially, their positions were getting liquidated, which means that they sell other assets to essentially pay off their positions, which caused another panic sell, which essentially caused the Fed also injecting money into the market space, usually bullish for the crypto space. But this time around, it played out in a negative way. As I said, a few factors played into it. But now we have some sort of an update, even from CoinDesk, on their newest reports today, that essentially what we experienced wasn't technically a bear market. And the crypto market space remarkably did well to withstand it compared to the 2022 and 2023 era. The new normal for 2026. The report concludes that the crypto market has reached a level of institutional maturity now. After the shakedown we experienced inside the crypto market space, now the topic is the crypto space is now at a stage of institutional maturity, where its biggest risk is no longer come from within, but from its deepest integration with global markets. While this means crypto essentially is now vulnerable to traditional economic downturns, it also means the crypto specific contained risks that once plagued essentially the industry have largely been neutralized. In other words, crypto is following the financial sector rather than following speculation and hype. As JP Morgan and BlackRock remain bullish for the rest of the year, just to repeat that one more time, as JP Morgan and BlackRock remain bullish for the rest of the year, this sell off is being viewed by many as a healthy correction, recalibration, rather than a signal of the ending of the bull market. I said this many times, this is not a bear market, it was just highly manipulated for some reason. Now, moving on from JP Morgan essentially and BlackRock's speeches to Franklin Templeton and Swift. Franklin Templeton and Swift, the future of banking is 24/7 and natively on chain. In a powerful endorsement of blockchain infrastructure, Franklin Templeton and Swift, the global financial messaging giant, have released a joint outlook declaring that the legacy 9 to 5 banking model is becoming obsolete. According to a report from Coindesk today, the two organizations, Franklin Templeton and Swift, argue that the global financial system is moving towards a natively on-chain future where settlement is instant, transparent, and operates 24/7. So not only do we have BlackRock and essentially JP Morgan saying for the rest of the year we are bullish on the crypto space, we also have essentially Franklin Templeton and essentially Swift now saying that, yeah, this is going to be an incredible year. This is going to be all about essentially natively, essentially the entire financial sector shifting into essentially the digital space. That we're moving away from this 9 to 5 banking structure to a 24/7 market space this year. Key pillars of the on chain revolution: eliminating the dead time. Franklin Templeton, a pioneer in tokenized money market funds, such as Benji, highlighted that traditional banking, dead time, essentially weekends, holidays, and overnight essentially delays, cost the global economy billions in capital efficiency. Moving assets natively on chain allows for a T+0 settlement, effectively making capital productive every second of the year. The Swift interoperability bridge. Swift revealed progress on its interoperability layer, which allows traditional banks to connect their existing core systems to public and private blockchains. Long time ago, if you said public to anyone inside the crypto space, it was no, not possible. Banks, institutions, public blockchains, never going to happen. But this is Franklin Templeton and essentially Swift telling the world, or even BlackRock moving their build on the DeFi sector, that public is actually a big feature for the banking sector and the institutional sector, enabling banks to send tokenized value across different networks. This bridge is critical for the $150 trillion global markets payment space. Institutional grade DeFi, the report concedes with BlackRock's recent move to list the build on the Uniswap. Decentralized protocols is essentially no longer an experiment for the new standard for institutional liquidity management. Stablecoins as the new essentially rails is what's being seen. Both entities agreed that the yield wars at the White House and the rise of regulated stablecoins are accelerating this shift. They view stablecoins not just as trading pairs, but as the fundamental layer of on-chain currency that will replace traditional correspondence and banking rails for cross-border trade. The joint stance from Franklin Templeton and Swift signals that the middle office of global banking is becoming hollowed out by smart contracts. As JP Morgan turns bullish, BlackRock turns bullish, Franklin Templeton turns bullish, Swift turns bullish for the entire crypto sector. And this is essentially just a speech of what was discussed. This development reinforces the theme of the utility era, where the value of digital assets is increasingly derived from its ability to serve as a high velocity 24/7 settlement tool for the world's largest pools of capital. That's big, big speech from Franklin Templeton Swift. Behemoths in the financial sector are coming out now today and saying they're all bullish on the crypto space. And there are people inside the retail section that are having doubts about their crypto portfolios, while billion-dollar industries are saying, yeah, now we're bullish. Now that the shakedown is pretty much done with, you could say, now we're bullish. Now the crypto market space is turning into a mature space. Now the rest of the year is going to be a great year. Now, moving on from that to regarding Ripple is what we're going to talk about next on tonight's live show. Before we talk about Ripple, let's go start a comment section first. As I said previously, this is live, which means if you do have any questions or comments, go for inside the comment section. More than happy to help you out. So let's see what's happening inside the comment section. We were here. Has Dubai just okay? Lol, like Michael Saylor. MicroStrategy lost connection, but all is back now. Let's go XLP then. Utilizing money that is not even his just to buy. Yeah, regard Maxwell, shaking my head. This is beautiful with the banking system. Okay, Aviva is what I'm talking about, and Ripple, and the Ripple XRP community event that happened today, essentially. If anybody, tuned into the X Spaces that Ripple did today, Brad giving his speech that, once again, reassuring everybody that XRP is at the core of whatever Ripple does going forward. Just a reassurance for everybody that is holding XRP. Second, regarding the XRP community event that happened today, there were so many incredible projects on the XRP ledger. Adonis is one of them. There's a few other ones as well. If anybody wants to go and check out these XRP ledger projects, some of them are they're doing incredible work, and I think they're worth definitely a check out just to see what they are, what they're going to bring towards the table as we go ahead. But there's so many great things happening in the XRP ledger, and it's all essentially community driven by crypto essentially influencers in the XRP community side, or essentially just developers that are only inside the crypto space that are not influencers, just developers, but they're all bringing some incredible things to the XRP ledger, alongside obviously Ripple pushing the XRP ledger, advancing the XRP ledger. So here it is. Aviva investors essentially to tokenize funds on the XRP ledger in Ripple's partnership. This is one thing that was mentioned by Brad himself in the X Spaces. Aviva Investors, the global asset management arm of the UK insurance giant Aviva PLC, announced a landmark partnership with Ripple to tokenize traditional fund structures on the XRP ledger today. This marks Ripple's first major collaboration with a European investment management firm to bring regulated financial assets on-chain at scale. As was mentioned essentially by BlackRock, it's all about tokenization. It's all about utility. Essentially, it's all about the liquid that's be entering. It's all about regulations. And you can see what Ripple's doing. They're bringing utility towards the table. They're doing tokenization as we speak, essentially. Aviva Investors, which manages over $345 billion, which is roughly about 246 billion pounds in assets, intends to use the XRP ledger to issue and manage tokenized fund products. The move is designed to leverage the ledger's near-instant settlement, low-cost, and built-in compliance features to drive significant technological efficiencies for institutional clients. Scale and utility. So here are some of the key details of this partnership between Ripple and Aviva Finance. Scale and utility. The initiative signals a shift from experimentation to large-scale production for tokenized real-world assets. Ripple's VP of Trading and Markets, Nigel, essentially noted that the impact of these on-chain fund structures will be maximized over the next 10 years. First, for Europe. This essentially is Aviva's investors' first foray into essentially tokenized funds and Ripple's first such deal with a European fund manager. It follows a growing trend of TradFi institutions moving core operations to public blockchains. Efficiency gains. By using the XRP ledger, Aviva aims to reduce operational costs and accelerate transaction speed. Research cited that during the announcement, it suggests that the asset managers globally could save over $135 billion annually by adopting tokenization technology. Environmental focus. The companies highlighted that the XRP ledger's lack of mining as a key benefit. This whole essentially operation of going net zero, essentially, of saving the planet, is also what Ripple's about. They're carbon neutral, in other words. And these European companies love the idea that the XRP ledger, essentially, or Ripple's, in other words, is carbon neutral. And that you don't need to mine XRP and produce so much amount of electricity and so on, and you don't need massive warehouses to maintain it. It's already pre-mined. It's 10 times faster, 10 times cheaper to operate, easier to build on, it doesn't get congested, and it's essentially safe for the planet. So, aligning with the initiative, Aviva's sustainability goals through superior energy efficiencies compared to proof of work networks. So, the Aviva Ripple deal arrived during the high activity week for institutional cryptos. Ripple's growth. This partnership comes at the heels of Ripple raising $500 million at $40 billion essentially valuation, which now Ripple is sitting at a $50 billion valuation in private funding led by Fortress Investment Groups and Seattle Securities. Market recovery. While XRP's price has faced some monthly pressures, major analysts like JP Morgan remain bullish on the sector, projecting that institutional flows will drive a essentially significant recovery for the remainder of 2026. Tokenization momentum. The announcement essentially concedes with what BlackRock is saying, essentially what JP Morgan is saying, what Franklin Templeton is saying, what Swift is saying, and so on. That going forward, it's all good. It's all going to be bullish. More institutions are entering. We're moving away from hype, speculations, and marketing to utility driven, which is exactly what's happening here. This collaboration further cements the theme of the utility era where major financial institutions are no longer just watching the crypto space, but they are actively rebuilding the world's $150 trillion financial system on a decentralized infrastructure. At the opening also of the Crypto Day, essentially for XRP 2026, Brad, CEO of Ripple, delivered a very, very strong message to the global community inside the crypto space, to the XRP community, describing XRP as the North Star and heartbeat of Ripple's long-term strategy, just in case anybody needed reassurance again that XRP is essentially the heartbeat of Ripple. Every footstep Ripple takes inside the financial sector, XRP is at the core of that movement. If it's not directly at the core, indirectly it is. Brad began his speech by welcoming XRP holders, developers, and partners from around the world, calling the event a celebration of people building and supporting the ecosystem. He said that the growth of XRP has been driven not only by technology, but also by the strength of its global community. According to essentially Brad Garlinghouse, XRP continues to guide Ripple's institutional expansion. XRP continues to guide Ripple's expansion, institutional expansion, on expanding liquidity around XRP, increasing real-world financial use cases, strengthening enterprise adoption of the XRP ledger, and building more on-chain financial infrastructure at XRP, essentially being his heartbeat. He emphasized that institutions are increasingly looking for fast, essentially low-cost cross-border payment solutions, and XRP remains a key part of that effort. Looking ahead, Brad said Ripple aims to grow into a global financial platform company by 2030, offering a wider range of infrastructure services while continuing to build trust across its ecosystem. He noted that utility, liquidity, and real-world asset adoption of XRP will remain at the center of the company's mission. The takeaway from all of this, Brad Garlinghouse's remarks reinforced once again Ripple's commitment to XRP as the core part of its future. signaling that upcoming initiatives will focus heavily on expanding institutional usage and strengthening the real world, essentially the real world role of XRP Ledger in the global financial sector. If you need the reassurance, once again, that XRP is at the core of everything Ripple does, it was mentioned by Brad himself today. Again, if you need reassurance that this market space is not doomed and we're not inside of a bear market space, it's just, what we experienced was something that needed to happen. There was a correction that needed to happen inside the market space, and it wasn't a bear market. BlackRock is saying it wasn't. So is JP Morgan's analyst. So is Franklin Templeton. So it's Swift. And they're all saying they're extremely positive going ahead for the crypto space. And it's not just random speeches, BlackRock making a speech. Yeah, we're feeling confident the crypto market space is going to pick up this year. And, tokenization is going to be picking up and real world assets, essentially, in other words, or essentially the DeFi space is a good place and so on. We think it's going to grow. They're actually taking footsteps. BlackRock taking a footsteps and essentially going into the public blockchain sector and putting essentially build on Uniswap is a massive deal, a huge deal, because it's not just speeches, it's footsteps. And Hong Kong going up against the UAE, trying to see who gets there first in terms of crypto regulations and what they can bring towards the table, is extremely bullish. Extremely bullish. When countries are going head to head to see who makes it first of becoming the capital of cryptocurrencies still in 2026, it's a reminder to you that this market space is going nowhere. It's still continuing, it's still going to be growing. And going forward, you're good. Stop worrying by looking at the price of essentially of your crypto assets or looking at the portfolio that you have. And then you might be down 10%, 20%, 30%, 40%, 50%, 60%, 70, 80. You might be down. But look at what's happening on the sidelines. We experienced a shakedown and a correction to go forward. And going forward is moving away from hype and speculation and marketing towards utility and regulations. And now that we have giants behind us, like BlackRock and JP Morgan saying, yeah, the remainder of the year is going to be exceptionally well. And the crypto space is going to be growing. And we have two countries headbutting each other of who gets there first. And Ripple, once again, reminding everyone that XRP is at the core of everything it does. Why are you worried? You shouldn't be. You should only be worried when countries slow down and they say, yeah, we're not interested anymore. You should only be worried when BlackRock comes out and goes, yeah, we're going to cancel our Bitcoin ETF. We're going to cancel the crypto space. You should only be worried when JP Morgan comes out and goes, yeah, we're going to be canceling all of our departments on the crypto space. Goldman Sachs coming out saying we're going to reject the crypto space. And the list goes on. But that isn't happening. It's the opposite. Goldman Sachs is expanding inside the crypto space day by day. BlackRock is expanding inside the crypto space day by day. JP Morgan is expanding inside the crypto space day by day. Countries are expanding inside the crypto space day by day by bringing regulations. You shouldn't be worried. You should only be worried if the opposite happens, not when the price goes down. Don't get worried about that. Get worried when the opposite of everything that we just talked about happens. But in fact, that isn't happening. What's actually happening is expansion inside the crypto sector, moving away from marketing speculation and hype towards utility and regulations. That's what's happening. And what else is happening is institutions are taking bigger footsteps inside the crypto space day by day. That's also happening. And that's a major positive. Stop looking at price action. Just stop it. Focus on what really matters. Because price action will come. It will come rapidly quick once essentially the bricks are placed in. Like a puzzle. On that note, we have reached the endings of tonight's live. This was the CMF live show. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. This was episode 439, where essentially, as I just said, I share you news and I share you my perspective. Disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As on this live show as well. So if you ever have any questions, go for inside the comment section. More than happy to help you out. Drop a like somehow or a retweet. Right now, I'm essentially, as I do, use Restream to essentially go live on X and YouTube at the same time. But Restream and X are having difficulties connecting to each other. So the live show might not come up on X where you can essentially, like it or retweet it. But you can, right now, watching this live show, click the three dots at the bottom Essentially, if you're watching this live show right now, you can click the three dots at the top and click share broadcast, and that should share it to everyone in X. And this video could help a lot of people that are worried right now inside the crypto space. You could actually help them out. On that note, as I said, we have reached the endings of tonight's live. So before we do go, let's go inside the comment section first, and then we'll call tonight and see each other tomorrow. Also, if you followed and subscribed during this live, thank you so much. And if you liked the essentially live show on YouTube, and you watch us on YouTube and you like the live show as well, thank you so much for liking the live show as well. Before we do go, let's go to the comment section first. Good night, Miles, brother. See you tomorrow night. Funky, see you tomorrow, sometimes usual as well. Wow. Aviva, let's go. Ripple has good builders on the XRP ledger. It definitely does. I agree with that 100%. It was a good stream, Miles. Brad was talking also. It definitely was, yeah. Let's go, Thompson. Funky, see you tomorrow, sometimes as usual. Thank you for another great live. Let's go. Thanks, Miles. Great. Love the positivity. Have a great night and see you tomorrow, same time. Artistic. Let's go. See you tomorrow, same time as usual as well. Good night, Miles. See you again tomorrow night, mate. Let's go, Addy. See you tomorrow, same time as usual. Thank you, Tom Miles. Have a lovely night, all. Lena, see you tomorrow, same time as usual as well. Thanks, thanks, Miles. Much appreciated. Did I miss the Ripple news about Aviva? Yes. So regarding Aviva, 246, 256 essentially billion pounds of investments they have. They just partnered with Ripple. They love the idea of essentially of Ripple's the XRP ledger. They're going to be tokenized on the XRP ledger. Massive European essentially company. Their first foray into the crypto space, they chose Ripple. They love the idea of the sustainability, the carbon neutral zero Ripple brings towards the table. There's no mining involved when it comes to essentially like Bitcoin. So they love the XRP ledger because of carbon neutrality. They love the XRP ledger because of neo cost, essentially zero movements, the speed it has, and everything else that it brings towards the table. And they're going to be using the XRP ledger to tokenize on it, which is incredible news, to be fairly honest. Incredible news. That's what's happened essentially. No dots here. Let's go, Susie. With gratitude. Night, Miles. Let's go, Susie. Good night, everyone. Good night, Miles, and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow. Same time as usual as well. Good night, Miles and CMF. Absolutely great news, Miles. Thanks. See you tomorrow. Let's go free and forever. See you tomorrow, same time as usual as well. Thank you, Miles. You're a lovely person. Respect. Let's go XRP Den. Thank you so much for the kind words. And see you tomorrow, same time as usual. Thank you very much, Miles and CMF. Have a great night. Let's go, Carlos. See you tomorrow, same time as usual as well. Take care, Miles and CMF. Great news. Great live. As always, let's go, Ray. See you tomorrow, same time as usual. Thank you, Smiles, for the live show. I will retweet the CMF live show. It is always a pleasure to be there, even if it is for 5 minutes. You are doing so great work, friend, and your news are so valuable for all of us. Thank you so much, Carl, for the kind words. And see you tomorrow, same time as usual. I don't worry at all. I know where we are going. Good night. Thanks. Let's go. Let's go, Cali. See you tomorrow, sometime as usual. Hi, Miles, Crypto Q's. How you doing? Good to see you. You tuned in right at the end of the live show. But rewatch it if you can. See everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. Love you all. See you tomorrow, same time as usual for episode 440 tomorrow, 10 p.m. London time onwards. Love you all. See you tomorrow.